Hello everyone, welcome to the first live stream of the week. If you're new to these, we do them Monday, Wednesday, Friday at 10 o'clock, and we take a look at really the major market levels, what's going on, where the opportunities might be, the events for the week, all that sort of stuff. I'll just leave the risk warning up for now. I think this could be a really interesting week. We're going to start off today looking at the pound, clearly because of all this political chat over the weekend. So we're going to start with that first of all today. Then we're going to look at the euro, and it's really picking up on the theme from Friday, where we saw it sell off quite sharply. And I was wondering whether basically it had been overdone and we should be a buyer of the euro. And I said, we can either buy on Friday, or let's take a look on Monday. Of course, because I've got no patience, I ended up buying on Friday. But I think we do have some really interesting levels to watch for the euro as well going into this week. And that's it. Then we'll look at the usual stock market indices. We saw big falls in stock markets towards the end of last week. So that, I think that makes for an interesting week this week. And then also gold and oil, which are a bit quieter. But again, there are some levels to watch there. And I think that's it, isn't it? Just a couple of quick promos, just to mention we've got this promotion at the moment. If you're not an account holder and you open an account, we're doing this 30-minute training session one-on-one with me over Skype. All you need to do, go to Capital.com/David, open a real money trading account, and once complete, we'll be in touch to arrange a convenient time for the call. And the link for that is in the comments on the right-hand side of this live YouTube session, and I'll also put a link in the description down below. And the other thing is we're doing this seminar on Saturday, this Saturday coming, in Heathrow. So if you're in the UK, we're doing the seminar. It's open to everybody. All-day seminar on Saturday, run by me, where we're going to talk about trading, the mistakes people make, some simple strategies, indicators. You know, I'm not a massive fan of indicators, but we'll talk a bit about indicators as well. Risk management, very important, and position sizing in the afternoon, and putting it all together and having a trading strategy. So that is it's all free, whether you're a client or not a client. It'd be great if you can make it on Saturday. And again, the link to register for that is in the comments on the right hand side. Okay, so that's all that stuff done. That's that. Let's get into it. So I thought we'd have a look first of all at maybe some of the major announcements this week. We have had this morning German IFO business climate data. And so it's really a sentiment indicator. It came out just before 9 o'clock this morning. And it's better than expected, which is interesting because it was the manufacturing PMI data on Friday for Germany that saw the euro and the German DAX index sell off quite sharply. But we've had a bit more of a positive reading today. So that's come out already. I think the next major event, 2:30 Wednesday afternoon, crude oil inventories. They happen every week. So they're 2:30. Then Thursday, you can see Thursday's a busy day. We've got European Union business confidence, 10 o'clock in the morning. US GDP, how well or not is the US economy doing? 2.7% expected the year. German inflation at 1 o'clock Thursday afternoon. And then Friday morning, German unemployment, so Friday could be interesting. And 9:30 UK GDP. Okay, so that's the big stuff to watch in the weekend. Right. Let's get into it. Let's start with the pound. Now, if you're based in the UK, you'll have seen there's been plenty of chat over the weekend about the Prime Minister, Theresa May. Of course, this was the week the UK was meant to leave the EU on Friday. It seems very unlikely that's going to happen. I think the earliest we'll be leaving now is that date in April. Is it the 21st of April? Oh, the 12th of April. 12th of April. But over the weekend, on Friday night, there was breaking news. A couple of newspapers, I think it was the Mail and the Sunday Times, carrying stories that effectively there was going to be a coup. And Theresa May was going to be ousted from her job. And they were talking about who would be taking over as Prime Minister. So that was on Saturday night. But now, what's happened since then, everybody who was being mentioned as a potential replacement has been giving their support for Theresa May. I think if the events of Saturday night and Sunday had happened during the week, we would have seen plenty of market volatility. But I think what's interesting, given all this complete ongoing uncertainty, is how the pound has opened. It's opened. Where's the open in Asia trade? It would have been about here. Here we go. So it closed on Friday at about 132.10, and it opened about 132.15. So very little volatility for the pound, but clearly it's going to be a big week this week. There's a cabinet meeting going on now, UK government a meeting now, where the Prime Minister is going to update ministers apparently on her Brexit strategy. I'm sure there'll be speculation during the week about her future. There are plenty of votes and debates this week as well. So again, it's a big week for politics. But let's take a look at the pound. Let's just remind ourselves where we are, pound US dollar. For now, let's take the indicators out of the equation. We'll come back to those in a second. So we had plenty of volatility, really, for most of last week. The pound trading as low as 130. And I think when we were last looking at this on Friday, we were saying that clearly 130, 129.50 to 130 has been a big level for the pound. We did see a 200-point rebound off that. And I think that's going to be the level to continue to watch going into this week. Let's just flip this over to an hourly chart. Here we go. So there's our sharp reversal off 130, and that was on 22nd. That was on Thursday, wasn't it? We saw the reversal. You could argue it is still in something of a downtrend off these highs. So maybe in the short to medium term, we will see these lows around 130 getting revisited. And I think that's maybe the interesting area to watch. You can see just how much of a floor it's been for a month now, 129.50 to 130. Saying all of that, I think, and actually it's in the comments as well. Yeah, I think David said in the comments, I think it's not a bad idea to stay away from the pound, at the moment, because who knows? It can all be progressing nicely. We have a nice trend, and then suddenly something comes out from the government, bang, everything changes. So it is clearly a politically driven market. So I think unless you've got a bug in 10 Downing Street at the moment, it is quite difficult to know how this market is going to perform, because so much can be changed just by a politician saying something. So, but on the downside, I think 130 is the level to watch. I suppose we could say, you could say, well, it hasn't reacted massively negatively. So there's an argument for being a buyer of the pound, because we haven't seen it fall off a cliff for all of this uncertainty. So I suppose the aggressive trade, we really wanted to be a buyer. We've had a low this morning at 131.60. It ran up to 132.20. So we've had a 60-point range in an hour and a half this morning. I suppose the aggressive trade is to be a buyer down here somewhere with a stop loss the other side of the lows for the day. Let's see what happens. But again, I think it's a hard market to trade given all of the political uncertainty at the moment. But clearly, one to watch this week. Something that's maybe a little bit, I would never say easy, maybe a bit clearer, is Euro US dollar. I think this is the market to watch this week. I think if you take the pound and Brexit out of the equation, I think euro dollar could be an interesting market. So we were looking at this on Friday. So on Friday, we saw the market get absolutely clobbered. So the euro went from about 114 near enough down to 113 in pretty much short order on Friday. And it was on that German data, so German PMI data coming in much weaker than expected. And I was saying on Friday, well, we did have this trend in place for the euro for a couple of weeks, chugging off these old lows below 112 as high as 114.50. And I was saying on Friday, I wonder if this is an overreaction. Is the knee-jerk reaction by the market too much? And I said on Friday, the aggressive trade is to be a buyer and put a stop loss either under this low here, the low for the day, or I think there were some lows back here, 112.60, 112.50. And I said maybe the more patient thing is to wait till Monday. Clearly, I'm not patient, so I ended up buying on Friday. I think 112.80 is where I bought on Friday, with a stop loss actually the other side of 112.50, these lows from back here. So the market did slip a little bit lower Friday afternoon, euro US dollar. But you can see now we are trading just about on the highs of the day. So for me, I think there's a reasonably good chance we will see further euro US dollar recovery this week. And I think the ways to trade it, clearly this isn't financial advice, this is my ideas. I think the closest I would want to stop loss is underneath that low from Friday. So the low from Friday was 112.73. So let's say you go for a 112.60 stop loss, which is 60 points away from where the market is now. But if it does rally back up to those post-US interest rate decision highs, about 114.50, there's 130 points potential upside there if it claws back the losses from the end of last week. So I think the euros are really interesting. It's interesting that we've got the sell-off on Friday. It tried to push lower in the afternoon, but didn't. And so far today, we've seen a positive start to the week for euro US dollar. So if you're a bit more patient than me, you might want to see how the rest of today pans out. Maybe it slips back below 113 and we go back to Friday's lows and have a retest. Maybe that happens and there's a better opportunity to get in there. But I think it's going to be interesting to see if we see the euro claw back those losses. I mean, the flip side of this, because clearly we need a plan for both ways. I think if it breaks below Friday's low, the risk is for a much deeper sell-off. Yeah, I think so. For me, I'll be out then. The risk is for the market to sell off and maybe we go back to the low 112s. But at the moment, after that knee-jerk sell-off on Friday, it is trying to claw back some of those losses. So that is going to be one market I will be watching closely this week. So like I said, I bought just below 113. I think my stop loss, let's say my stop loss is 40 points away. I want the market to move at least 40 points in my favour before I move my stop to break even. And we'll talk actually more about moving stop losses in this Heathrow seminar that we're running on Saturday. Okay, so there's a link in the comments on the right hand side. I can see a bunch of people have just joined now. I think we had a bit of a problem sending out the alert from our app. It went out a bit later than usual. But this Heathrow seminar on Saturday, the link is in the result. So euro US dollar, I think one to watch in the week ahead. So let's see. Okay, so we've done the pound, we've done the euro. What should we look at now? Let's take a look at oil and gold. Let's look at gold first of all. Gold is still doing what it should be doing. So again, just to recap, I think for me, the important trend on gold is off the lows from August. That trend is still going. We had a sell-off late Feb, early March. It did hold above the lows for the year, 12.75. I think for those who are looking at from a medium-term, longer-term point of view, 12.75 is a big level. It's the lowest for the year so far. So we had the sell-off. The market dropped to 12.80, and since then we've seen a bounce back. And if you flip this over, if I flip this over to an hourly chart, there is our little trend chugging away. So again, I think like I was saying last week, if I was short-term trading this, I would be paying a lot of attention to that trend. So that trend since 7th of March, so for the last 3 weeks or so, 2.5 weeks, done a great job for gold. So at the moment, we're still strong. The obvious target is a run back up to the highs for last week at 13.20. If it breaks 13.20, I think we have to start looking at a move back to the late February highs at 13.30, and then after that, back up to those highs for the year so far. And that is my target for now, for gold, is a run back to those highs for the year. Okay, so would I buy it? Would I buy it here? I've bought bits on the way up since August. If I was a buyer now, what's the closest I'd want my stock? If I was trading this trend, probably underneath these lows from last week, around about 12.98. So I think any weakness on gold looks like a buying opportunity. As long as 12.75 to 12.80 holds, I still be bullish on it. First big target is 13.50. After that, later on in the year, sort of 13.60 to 13.80, that sort of zone, which has been a real problem for a long time now. So let's see, but gold is doing as it would be expected to do. Oil is interesting, right? Let's take a look at oil. So US crude oil. Oil is interesting, not because it's actually going anywhere, but because think of what it did at the end of last week. So the oil did move to fresh highs for the year last week. This $60 level that I've been talking about for a while now. I think this is going to be a problem. It did move through 60 last week. It traded as high as 60.41, and then it sold off again. Okay, so I still think that recovery is still going. You can't deny the recovery is still going in oil because it hit new highs for the year last week, but it's just struggling to find much in the way of traction when it breaks out to these new highs. And I thought what was interesting for the short-term traders, I always, if you've attended these things for a while, you know I always bang on about the importance of previous lows, previous highs and lows, all that sort of stuff. So I thought what was interesting was it Friday? It was Friday, wasn't it? So on Friday, the market did sell off till about 3 o'clock in the afternoon, 4 o'clock. It did move below these lows from last Wednesday, but we've got so much support for oil in the short term, running from 58, these lows here, 58, whatever it is, 58.30. And we've seen the market rally about 70 points since then. So for me, even though I think it's going to struggle with 60, so I don't see it at $65 a barrel anytime soon, famous last words, it doesn't necessarily mean it's going to fall off a cliff. I just think it's going to struggle to make any reasonable progress at the moment. But any weakness, back to these old lows from 58 upwards looks like a short-term trading opportunity. Okay, so it's selling off and looking for it to have another go at $60 plus, and that's what we've seen so far. I wouldn't want to be a buy now. We've got clobbered this afternoon or tomorrow morning. Then think again about, okay, are these old lows going to hold? Yeah, so it's not that exciting, sort of week to week oil. It's interesting that 60 is proven to be a problem, but I still think there are short-term opportunities whenever the price gets hit in the short term. So let's see. Now, stock markets. In addition to the euro, I think stock markets are the markets to watch this week, and of course the pound, but that is quite unpredictable because of the Brexit political situation. But stock markets are interesting, right? Let's take a look. Let's start off with the S&P as usual, the broader US stock market. Then we'll look at the Dow, the Nasdaq, the DAX, and the FTSE. So let's just take this out. So let's go to a daily chart. So that recovery from December is still going. So the S&P traded as low as 2350-ish on Christmas Eve. Last week, it hit fresh highs for the recovery, right? So it is, again, like oil, if the market's hitting fresh highs for the year, then that's pretty bullish. Yeah? The market is clearly going up. I mentioned these old highs from before. When we were approaching these old highs from October, November, December, I said, I think the market's going to have a problem here. It had a bit of a problem in March, but then burst through it last week. And the only question now is, well, is this a false break? We've seen a really sharp reversal on Friday, okay, which I think makes for a really interesting week this week. I think whenever a market has a run like this, it's always tempting to try and call the top. And I'm sure there are plenty of people out there on Twitter and places, who all the way up have been trying to call the top in this recovery. We've had a really sharp reversal on Friday. That's known as a bearish engulfing candle. So let me just zoom that right in. So this was Thursday's trade, bang, out to fresh all-time highs. And then Friday, we have a day that engulfs the previous day's candle. Bearish engulfing, pretty negative sign for the short term. Okay, and so far today, we are seeing under pressure. But, it's rare, apart from down here, that markets make a handbrake turn. We normally get a bit of to and fro at these levels. Yeah, so I think, for me, it wouldn't surprise me if we saw, at some point this week, the strength come back in for stock markets. Okay, so the indicators aren't really telling us anything. The RSI is pretty much in the middle. It was overbought briefly last week when it hit the high. MACD is pretty flat. Let's take a look at some of the levels. Okay, so let's have a look. So here's the hourly chart for the S&P. Then we'll do the same thing with the other indices. So here's the move on Friday. Frustratingly, I did go short the S&P on, I think it was Thursday night, at 28.49 with a stop at 28.56. Got stopped out, of course, only to see it absolutely fall off a cliff the next day. But anyway, so on Friday, where was Friday's close? It was about here. So it was a really weak close on Friday, closing on the lows. This is the hourly chart we're looking at. Slipped below the lows for the past couple of weeks, but we still have lots of support. So I think we've got fairly good support from March the 12th and March the 13th, around about 27.80. So the S&P at the moment is 28.03. It opens at 1:30 in the the moment because we haven't changed our clocks here in the UK. So I think going into this afternoon, it's the first level to watch. We have seen a low overnight at around about 27.87. So I'll be watching 27.80 this afternoon. So I wouldn't be a buyer straight away when it hits it, but I think, given the momentum we have seen in these markets, I am expecting it to snap back and have another push higher this week. Looking at the old squiggles, the RSIs down here, it does actually build a case for recovery. Okay, these are only shorter term RSIs, but the 10-hour RSI, market goes oversold on Friday afternoon, RSI oversold, market bounces a bit, then slips lower, but the RSI is making higher lows. So this thing, I've mentioned it a few times in the past, this thing is known as bullish divergence. So it can be a suggestion that maybe the weakness is running out of steam. The MACD also, about 3 hours ago, gave a buy signal as well. It's the first time we've had a half decent buy signal from this deep since here, okay, since the 8th of March. So that's quite interesting. So I suppose the aggressive trade, it's not what I would do, but the aggressive trade, if you thought it was going to recover, a buyer now at 28.03, wherever it is, a stop loss either underneath the lows for the overnight session, or me, a stop loss below 27.80, the lows from back here. But I think it's going to be a really interesting start to the day, to the week, I think, for US markets this afternoon. They are still weak, short term, but I think we are going to see a snapback at some point this week. Let's see what happens. Let's look at the others. Take a look at the Dow. Then we'll do the Nasdaq. Then we'll look at the European markets. Then I'll answer any questions. If you've got any questions, just fire them in to the right-hand side chat on that YouTube page. So let's take a look at the Dow. I mean, what is interesting, and we were talking about this last week, the fact that last week the S&P did push out fresh highs for the year, but the Dow didn't. It was interesting. The Dow in Feb got as high as 26,245, and we've been saying how important these old highs are, about 26.3. Last week, or was it last week? Yeah. It only managed to get as high as 26,115, 120, and it's weakened. So again, I think going into this afternoon, we have some obvious levels to watch on the Dow, and it's these March the 8th lows. Let's take a look at it in a minute. Again, on the daily indicators, not much. The RSI is flat, the MACD is a bit weak. Take a look on the hourlies of the RSI for the Dow. Here we go. So the Dow has 6 o'clock this morning slipped as low as 25,360. Do have big Dow support from March the 8th, ahead of 25,200, okay, which is about 300 points away from where we are now. But I think that's the level to watch. And these old lows from 25.2, maybe to 25.3, this sort of area. See if the market can build some sort of base over the next few days down here. We have the same thing going on with the RSI. So we've got the market slips lower, the Dow slips lower, the RSIs make higher lows. So again, bullish divergence. Let's see what happens. I do think again, if we break below these overnight lows, the risk is for a bigger sell-off. So even though we have lots of support where we are now, going into today, let's just remember, US markets had a very weak finish on Friday. Okay, so you would expect some of that sentiment to be hanging over today. So famous last words, I don't think it's going up like a rocket today. Maybe it needs a couple of days to try and unwind some of this weakness. Let's see what happens. Nasdaq, we'll have a quick look on the dailies for Nasdaq, and then we'll look at the DAX, which is an interesting market, I think. Here we go. So look at the size of that move. So again, Nasdaq pushed as high as 75.10-ish on Thursday, which was, this is not a million miles away. It's about 200 points away from its all-time high. Sharp reversal. You can see again that bearish engulfing candle. But again, today and tomorrow. Let's just see. Let's see how we've got lots of these old supports for the Nasdaq, pretty much from 71.50 all the way up to 72.50. That sort of area. So let's see what happens this afternoon. Okay, let's look at European markets because they are a little bit different to the US. Let's look at the DAX. DAX is a really interesting index. It does do its own thing. I mean, eventually it does tend to follow US markets eventually, but it will do its own thing sort of during the day. So I think if you wanted volatility, DAX is a really interesting market. I think it is the most popular index amongst our clients. So let's just try and pick up on the DAX and see what's going on, because we had that really negative PMI data out on Friday, and then we've had this more positive ISO data. It's all about the three-letter acronyms out today. This recovery from December is still going, right? And last week, the DAX did hit its highest for the year. It traded up to about 11,830. Okay. So again, like the S&P, it's starting to push through the November highs, but October still a bit of a problem. Sells off heavy on Friday, but we are seeing something of a recovery so far today. So let's take a look at the levels. So again, I wouldn't necessarily just be a buyer blindly now, right? But this level, this sort of 11,400 level, since the third week of Feb, had done a good job of stopping any weakness. It slipped through it in the last hour or so of official trading on Friday. Gap's a bit lower today, and it's trying to regain it. So I suppose for the rest of this week, we have these old lows left from Feb as well, around about 11.2. Let's call it 11.250. So I think this whole 11.250 to 11.3, the lows for the day so far today, is the level to watch. I think clearly the German economy looks vulnerable at the moment based on the data we've had. But again, if we're going to see it start to build a base, just watch this sort of zone. I think for the moment, let's flip this over to a short-term chart. Arguably, you should still be a seller rather than a buyer. That was the move on Friday when that data came out. It absolutely fell off a cliff really quickly, lost 150 points so really quickly. So it's still going to be a nervous market. But let's just see. I think it'll be interesting when we come back to it on Wednesday, see if it has had some sort of stability. I think if it falls below 11.3, because it's such a nervous market, it could well be a case of look out below. Yeah. So let's see what happens. But a weak finish by stock markets last week. So that you would expect them to still be a bit nervous today, but US markets in particular, when it comes to the S&P and the Nasdaq, they did make new highs for the year last week. So arguably the medium-term sentiment is still bullish. And here's the last one before we get into the questions. FTSE 100. So the FTSE again last week pushed out to its best levels since October. So traded as high as 73.80 ish, got hit on Friday, but again, that trend is still up on the FTSE. I don't think you can't. If you're looking at this in isolation, just looking at the price action, it's easy to get carried away with that one-day move. But that trend is still up. So I think again into this week, is the FTSE going to recover? We have big support just before that push out. The late Feb support around about 7,050, so 150 points below where the market's trading now. Let's flip this over to an hourly. Here we go. 7,080 support from earlier in March as well. So yes, stock markets definitely one to watch this week. Okay, so to see if they can get back into sort of bullish mode this week. The stock markets and from the euro as well. Just what we were talking about earlier. After that big sell-off on Friday, do we see it try and claw back some of those gains and maybe get back up above 114 this week? And then, of course, in the background, all the Brexit stuff, all the Brexit, Theresa May, the pressure that she's under at the moment, talking about resigning, talking about being forced to resign on the weekend. Doesn't know that's going to happen, but all of that going on as well. So plenty to watch this week. I'll just get into the questions now. So the Dow, someone asked for Dow, we looked at that. Can we have a look at Boeing? Yes, of course, we had that terrible accident. Was it a couple of weeks ago now, wasn't it? So let's take a look at the Boeing share price. And then I think it was quite surprising when we first looked at this, maybe how little of a reaction we had. So these are Boeing shares. So December, they were about $300 a share. I mean, this is an incredible move. Yeah. So Boxing Day, you could have bought Boeing at about 300. By the 1st of March, it was 440. That's what's that, 40%, almost a 50% move in a big share like Boeing in 2 months. Then, of course, we had that news about the crash, and it's second time there. Was it seven? I don't know the type of plane that crashed. And we had before the crash happened, they were trading at 421. They opened at 370, but did get all the way back up to 400. And I think since then we've seen various countries around the world refusing to let that model of plane fly. And that has put some pressure on the price. And so I suppose if you're an investor, what's going to be interesting, since that terrible crash happened, 360 has held the price up. It closed on Friday, just below 362. So I think that the question would be, well, are we going to see strength in it from here? 362, I think, is the real interesting short-term level. But it has for years an absolutely fantastic trend. Okay, so let's see what happens. I suppose the risk is if it breaks 362, we have a move back into that range for all of last year. From 290 to 400. So I think that's the risk that we'll push back into that range. But I think 360 maybe the big level to watch. General Motors. So look at General Motors. So General Motors. General Motors. Here we go. So again, under pressure from Friday clearly because of the weakness we've seen in markets. But let's take a look at the bigger picture for General Motors. It's quite messy, I think, isn't it? I mean, we had this downtrend. That's maybe the more relevant bit. Since June last year, there's been a downtrend. Breaks out the downtrend here, pushes higher, comes back, retests near those old lows. So that was a good opportunity. The $30 a share had been a bit of a floor. Has bounced higher, but had a look to these old highs at 40. But again, can't really get any momentum. Looking at the RSI, it's pretty oversold down here. The last time it was this oversold was here. Okay, the old lows around about 32. But that looks like a pretty negative finish on Friday, and we're filling that whole gap. I think in the short term, it wouldn't be surprising, looking at the price action, even though it's oversold, to see it under a bit more pressure. And I think where it gets interesting is if it slips back towards 32. If you get closer to 32, because clearly, 30 to 32 is a big base for General Motors. So for me, I mean, I wouldn't, I think there's, we could argue there's maybe a bit of a recovery going on. Where would you want your stop loss? The closest I would want my stop loss is below these lows. So with it trading at 36, it's too far away from it. If it pushes back down to here, then maybe it gets a bit more interesting. So maybe a bit more drift in the short to medium term. If it pushes back below 33, maybe it gets a bit more interesting. And another General Electric. Okay. That is, I did something on downtrends recently, on the risks of buying in downtrends, and I think General Electric was the example I used, because if we go to July 2016, so 2.5 years ago, it was $33 a share. Today, or Friday, it closed below $10 a share. So for me, that trend is arguably still down. Right, it's been a really sharp trend. It really picked up from December 2016. I would argue that trend is still down. Okay, we have seen since December a recovery off those lows below 7. But is it enough to be convincing? For me, not yet. I mean, I'd rather see it break above 14 to suggest that trend is over, which is a long way away from where we are now. So I think the risk is in the short to medium term, as it has been for the last couple of years, that rallies run out of steam, just get knocked back. I suppose if you were a buyer, if you were really convinced, the closest I would want my stop loss, the other side of $9, those lows from March. There's an argument to have them inside of 8, the lowest from January, and then for the really conservative, the other side of those lows, $6.50, $6.60. So for me, I think it still looks a bit vulnerable. Let's see. Let's come back to it in a month and see how it's traded. But it has been such a great downtrend for a couple of years now. Clearly, the pressure's still on. Right, that's it. I think we're finished, aren't we? No more questions. So we'll wrap things up there. So stock markets is maybe the interesting market for the week. The euro, to see if it can gradually claw back. But the euro, historically, in recent months, the volatility has been so low. I wouldn't expect too much excitement day to day. But let's see where we are at the end of the week. As usual, we'll do this all again on Wednesday at 10 o'clock. To never miss out when we go live, just make sure you're subscribed by clicking the subscribe button down there and that alarm bell. If you could click the thumbs up as well, if you find this useful. I think thumbs ups are good for our YouTube visibility. There you go. So if you click on that. Any questions, drop me an email, david.jones@capital.com. You can follow me on Twitter, Jones the Markets, for stuff during the day. And that's it. Yeah, let's see if these stock markets can turn things around the next couple of days, or whether they're going to stay under pressure Friday. But I think it could be an interesting week. We'll wrap it up there, and hopefully see you on Wednesday when we do one again at 10 o'clock.